Hello, my name is Andrew Thake. I'm a division director at Resourcing Tomorrow, and today I'm joined by Cailey Barker, who's a managing director at Excelsior Capital. Delighted to have you with us today, Cailey.
Thanks very much for having me, Andrew. It's delighted to be here.
Uh, Cailey, for those that are unfamiliar about Excelsior Capital, can you tell us a little bit about the company?
Sure, yes. It's a relatively newish vehicle, but people may be more familiar with Wogen Resources, which it's partnership with. Wogen are by far and large one of the largest metals traders in speciality and critical metals. So they tend to trade in the small metals that a lot of the big traders don't. So antimony, graphite, tungsten, rare earths, etc., etc. And so they've been around 40 or 50 years, very well established, and Excelsior is partnered with them to basically do the investments that they haven't done a lot of over the last 40 or 50 years. So predominantly private credit plus metals trading, some share of the underlying commodity that Wogen can trade. So yeah, private credit plus metal trading, I think would be the short answer.
And taking like a further step back, you've had a very long and illustrious year in mining and mining investments, probably about 20 years or so plus. In 2025, where do you see the current opportunities for natural resource investors?
Yeah, well, yes, as you said, I've spent a long time on the equity markets, and particularly when I was in my last outfit at BlackRock, and then on the sell side. So I've been around for 3 decades in the industry, and it's a very although I've been through quite a few cycles, and I don't think I've ever seen the opportunity set quite so compelling, but at the same time confusing. And I see so many opportunities, but it's just a very, very difficult path to navigate to get there. The whole narrative has shifted from what's been green and energy transition, and particularly with what's going on in the States, it's shifted far closer towards strategy, defense, and resource nationalization, tariff wars, and so forth. I think that sort of broadly means that most commodities should do well in that environment, and particularly if the US dollar continues to be weak. But it will be quite volatile, and people will want to play into the sort of safer commodities, I guess, to some regards, like copper and gold, for example. Whereas the speciality metals, which is again what I look at Excelsior and with Wogen, those are very small markets, but going to likely remain very buoyant and in high demand, given everyone's trying to protect these very interesting commodities.
So how do you kind of look to invest in these speciality metals? Because there aren't sort of like too many miners that are sort of particularly like within that space. And often, I guess, if you take areas such as rare earths, more the sort of like value generators often in the midstream and then in the downstream. So does kind of like Excelsior look at sort of like both investing in the upstream, midstream and the downstream, or is it just the upstream?
No, we look at it all up and down the supply chain. And indeed, there are a lot of opportunities, particularly in the midstream. Let's take antimony, for example. We did a deal last year on the Hillgrove mine in Australia with Wogen Resources on their antimony. But it's very hard to place antimony currently. That material can only really be processed in China currently. There's a few projects that are currently going on, looking at refining and smelting, so the midstream part of that supply chain. So there is opportunities in there that we're tapping into. And to answer the earlier part of your question, it's very hard as an equity investor to get exposure to these commodities because they're quite often byproducts. They're thought they traditionally were penalties within processing. Antimony again, was a sort of $7,000. It was just basically a nasty commodity that you were penalised on, and now 60,000. So these markets have moved very quickly. They're very volatile. It's very hard to get that equity exposure, particularly in size. If you're a big generalist investor, you're just not going to be able to There's very few equity stories that have the liquidity and size thresholds that most equity investors need. So, that's the opportunity for us being at somewhere like Excelsior. We can look down the chain, we can look upstream, midstream, downstream, and we can look also at some of these smaller players that are maybe struggling to find equity and struggling to find financing for what might be a smaller project for most other bigger houses.
When you are evaluating these companies, or I guess mining companies in general, what are the particular green flags you're looking for? And I think just as importantly, the red flags to avoid.
Yeah, well, I think, management is always number one on my list, because projects can work, cannot work, cycles come and go, commodities can be up and down. But if you don't have the right management team, they won't wear you through that. So there's been good examples of strong management teams that have been able to build a business through time, and it's never a straight line. It's a very rocky road. Sometimes they do well, sometimes they don't do well, projects don't work out, but as long as the trend is always upwards, that's a good sign of management. So that's always the biggest tick in the box for me. That's not to be said I wouldn't back younger teams or less experienced teams that don't have track records. I think number two would then fall into the sort of jurisdiction ESG bucket. There's places I wouldn't go, things I definitely wouldn't look at because they have too many hairs on them. And then finally, it would be down to asset quality. And you would think in the older days when I first started out in this business, asset quality would have been number one, would have looked at the grade and scale of a project. But really, that's further down the list now, I think, just because the whole market is far more risk averse.
You also sit on the investment advisory board that we've put together for Resourcing Tomorrow, and a question that often gets asked is, given the rise of ETFs and royalty and streaming companies as an alternative to direct equity miners, why should you go and look to invest into these junior mining companies? Isn't it just easier and less hassle just to invest into an ETF or just to invest into a royalty and streaming company?
Definitely easier, definitely cheaper, but then you'll get. It depends on your risk profile, right? So you're not going to get the returns that. It's great for a sort of broad commodity exposure. So you can just pick. Okay, do I want to be in mining? Do I want to be in maybe a particular commodity like gold? And do I want to pay a low fee for that? And then just sleep at night, and that might be fine. And then so if the commodity does well and the sector does well, you'll make a reasonable return. But if you really want large returns, you've got to have some kind of active management, and that's where active management is you pay a larger fee, but you potentially get a bigger reward. However, it's a very concentrated universe in mining and very small, so it is hard. It is a shrinking pool of capital. Active fund management is under enormous pressure. Sadly, and so that's why we've seen a sort of concentrated investment universe, particularly just generalists that want a sideline exposure to our industry. They really just sort of want the large liquid names, and again that opens up sort of opportunities for people like us that are resource specialists, look at mining and commodities all day long and see far more opportunities and arbitrages, in particularly towards things like valuations.
Completely changing tack. One of my favorite management gurus is Tim Ferriss, who's probably best known for his the 4-Hour Working Week. But he also wrote a really interesting book a few years ago called Tribe of Mentors. So I'm just going to try out a few of the questions on you, Cailey. What is the book or books you've given most as a gift and why? Or what are the 1 to 3 books that have greatly influenced your life?
Well, I guess the one that really changed my life sort of professionally is Dale Carnegie, How to Win Friends and Influence People, which is one I scrawled all over and it's very well thumbed. But that just the idea of how to sort of market yourself and network and take notes about how you meet people and just build up your own sort of personal brand. I think that was a massive influence on me. I have never gifted that one. I've recommended it a few times. I've never gifted it. If I was to gift one, I think it would probably be Peter Attia's Outlive, which is he's a longevity expert. He's got a very successful podcast platform, and on a personal side, I have my own blog and feed. It's called The Whisper. You can go onto caileybarker.com to see that quick self-plug. But that is sort of a bit more about life, and longevity is less about pure health longevity. But that's a great book to understand, like, how, if you want to have a healthier life and you want to live longer, diet, exercise, sleep, etc. That's a great book. Yeah, Peter Attia's Outlive.
What advice would you give to a smart, driven college student about to enter the real world? What advice should they ignore?
What advice should they ignore?
Yeah, or like, what advice would you give, and what advice should they ignore?
Well, I think advice I would give would be like, work hard. You have to be Teflon coated. You've got to be ultra resilient, and you've got to make your own luck, because you do need an element of luck. But the harder you can drive towards it, you can make your own luck. I think the advice they should probably ignore is like, work to the detriment of your health. Health and family is number 1 and 2, and job is a job at the end of the day. So don't kill yourself working too hard. You've got to prove yourself, and you've got to make money, and to live in this world, but don't do it to the detriment of your health.
And one last question from the Tim Ferriss Tribe of Mentors book. How has a failure or apparent failure set you up for later success? Do you have a favorite failure?
Well, yes, I suppose I do. My biggest failure was my very first fight when I got into in the street with it when I was a young lad, and I got battered, and I took up martial art. It drove me to take up martial arts. I took up martial arts, and I've been doing it for 40 years now, and got a handful of black belts and all kinds of stuff. So if I could ever find that little kid that punched me in the face in the park in Kilburn, I'd probably shake his hand, because he changed my life for the better. And one thing I learned in that journey is the Japanese have this great saying called Nana Korobi Ya Oki, which means fall down 7 times, get up 8. So regardless how many times you fail, just keep getting up, and keep failing, and keep getting up, because you will fail. But it's the people that can get up are the ones that win.
Delighted to have you with us today, Cailey. Thank you very much for a very insightful interview. Thank you very much for your time.
Thank you.